Jyoti, can you hear us loud and clear? Jyoti?
Very
Okay, perfect. Okay, you're on. Just want to check. I believe we can start earlier if that allows me. We're waiting for Jerry to come in and then we can get cracking. Can I start earlier? No? Okay, wait, okay. Well, I have been told I have to wait for 2 more minutes and we will start very quickly though. In the meantime, Brett, David, Jyoti, Randy, you'd like to share something?
just a minute now, Taj.
Okay,
Yeah, I'm just checking out some of my latest rates.
okay, excellent. That'll be good. That'll be very helpful, actually.
Sorry, Namtaj, I missed what you said. I was just busy with
That's
something
okay.
else.
Actually, we get extra 2 minutes if you have something like to add up right now before we start conversation. Yeah.
Yeah, we're good. We'll wait for the first person to speak.
Okay, all right. We can mark. Okay. Okay, it's killing me. Come on. Give us a go ahead. 2 more minutes. Okay. So a lot of activity in the market as we speak. Tonight we are discussing about what's happening with interest rates, what are the options are, what the builders are doing in Canada. And we have all the experts tonight here. So we're gonna have a lot of helpful information tonight. David, do you mind checking with Jerry if he can log in earlier? David Watson. Good evening, ladies and gentlemen. My name is Nathaniel. I'm your friend. And is everybody can see the screen now?
Yes.
Perfect. Thank you. Appreciate it. So I'm your friend. I've been doing this business, started the networking meeting in 2005, April. So far, so good. We never missed even a single meeting so far for the last 18 or 18 plus years. So that's
Nataj, I'm sorry, I don't know if there's an echo for everyone, but yeah, somebody needs to mute, I think.
Okay, unmute, if you can unmute yourself, that'll be good. Thank you. Thank you. Is it gone? All right,
Yes,
thank
it's
you.
gone.
Yes.
Okay, perfect. Thank you. So we're doing this for a while, and the purpose of platform is to share knowledge, information from experts, bring you up to date. In this industry, if you're not up to date, you might be missing something. So there'll be a lot of information we share tonight with you, and we are happy that you're here tonight. We sincerely want to thank you for being here tonight, though. So we're gonna be. Why do you join the real estate club? Again, there are a lot of high performer real estate investors in this club. Ideas to exchange ideas and collaboration, joint ventures. This business is never to be done alone. The more people you know, the better it is for you. Is it a good time to invest? Absolutely the best time ever. When the market is down, competition is zero, there are too many opportunities out there, and we can make the very best out of it as we speak. So if you're networking, the idea is to, if you have a deal, you want to share ideas, thought, or something, you raise capital, this could be the platform you will be able to join. So why do we want we call greater golden horseshoe? Why do we invest right here? The population growth, if you look at it, it has multiplied twice, and number of new Canadians coming in is amazing. We got 103,000 people join Canada last month alone. So we are doing something. Where the GDP come from, this is the area. This is the third best place in the world to say it, most educated country in the world. And Toronto, this is something where we all need to be focused on. What kind of labor we target? Toronto or GTA become the tech hub for third tech hub in North America. We have more jobs in the IT industry than a lot of other places, by the way. Just thought I should just share with you. So where are the jobs? Believe it or not, some of you will be shocked. Government agencies are hiring more people than the private people, by the way. And this is from pre-COVID to June 2023, information released recently. Just thought I should share with you. So those people who are working for the government, some of them working as a contract, but again, the growth is about 12%. That's pretty high though. Now, Canadian economies in August, we got more jobs created, by the way, again, than what they're expecting. We're expecting not that many jobs. We got the 40,000 jobs altogether. It does not help much about unemployment rate or inflation. But again, these are the facts, and that give a reflection. Whenever there's a burst, first thing we used to notice in the past, in the 70s, 80s, and 90s, the red flag for a boom to burst is unemployment. Number one will hit the auto industry, then the bankruptcies, the interest rates, and so on, and the loss of jobs. And this is the other way around. This type of slowdown we had in Canadian real estate is a lot more different than what we have in the past, though. Why Alberta is booming? It's like a gold rush again. People are rushing towards Calgary and Edmonton or Alberta as a whole because it's more affordable. And people are going down there finding it is reasonable. There's no there's no PST, there's only GST, and things are a lot more cheaper. But again, this thing always happened. It happened in 81, it happened in 74 when we had the boom, oil boom started. And we'll discuss a little bit later on tonight where this population moves. So what happened about the super distressed home sellers now? All those people who bought the pre-construction condos, houses are now, the market has shifted slightly. Some of them are selling for far below than what they paid to the builder. And they want to sell it fast, and they're offering all kinds of incentives. As a matter of fact, I had a recent post in Facebook, and there are some builders, they are doing the mortgage pay down. I'll be speaking about it how you can take advantage of it. Builders are also hurting a lot, and they just want to get rid of their inventory, and they can offer you a sweetheart deal, even if you're an investor or a homeowner, though. And that could be good news for certain type of people, though. Not for everybody, but could be good for some people. What is happening with Calgary? Some of you may know that 2 years ago, we had a couple of builders approached us, and they wanted us to take all inventory. Now it's the other way around. The condo price are gone substantially higher, regardless. And this is the first area where you can see a green signal. Hey, this is a good place to go and invest if you want to do it. How many people in Canada in last quarter 2023? 1.2 people came in. That's quite a number of it. And we still need about 1 million more Canadians or new Canadians to get the economy rolling, because there are a lot of baby boomers like me who are born in after Second World War or over the age of 60, 65, and there need to be some sort of replacement, and they want young folks, especially in knowledge-based economy, which is more or less towards artificial intelligence, ITs, and so on, though. And also we are progressing very well in some of the industries which we never thought we will, which are natural resources, though. So this is something we should look into it, and health is another one. These are the resources where we get most information. By the way, a lot of people ask a question, hey, where do you get information from? Just thought I should share with you. So these are the bank rates, which is painful for a lot of us. And finally, they have stopped. The Bank of Canada, this is the fastest rise we ever had in the history, how the rates have gone up. Now, this is Toronto. This is how the new developments are coming up, by the way. It's going to become a concrete jungle. I mentioned to you before, I'd like to remind you, the yellow belt is the area where you invest, your property will multiply its value. I will be giving you a couple of examples where the properties has multiplied in a very short period of time. This is the yellow belt area in GTA. And this is where a lot of sophisticated investors are investing their capital or investment, knowing that if they want to multiply the investment 3 to 5 times or higher. And that's the area some of you need to look into it, instead of going only pre-construction or condos. Pre-construction condos are easy to get in, easy to manage in a way, but the appreciation is there, but it's not a multiplication, though. Given a choice to you, would you like your property to multiply its value or appreciation? What do you prefer? Most of you agree with me that you prefer that your property multiplies value. Here is the question for all of you, all of this, our experts tonight. And the question is, are we sitting on one of the largest bubble of housing? What will it take to burst it? So this is the question I'll be asking tonight, from starting with David. And we also have a couple of other people tonight here as our experts, whether it is David. I would like to have your feedback to begin with. Then we move to Jyoti and Randy Goodman.
Sure. No, I don't think we're sitting on a bubble, because, well, first of all, values, I think, if they've gone down, it's been marginal, and there's just too much demand for real estate. The demand is so high with continued immigration and urgent housing shortage. So there's just too much to demand to see any significant price drop in my view.
Excellent, thank you. Randy?
Yeah, I don't think we're in any bubble either. I think prices may stay steady right now. We're not sure where they're going to go next year, but totally agree with what David was sharing with everybody, with all the changes with the interest rate changes and the unemployment changes, which has been going up, which is what they wanted to drive. And all the immigration coming in, I think things are gonna just continue to keep moving.
All right, thank you. Jyoti? Jyoti Chaudhary, are you there?
Yeah. I think because of the immigration targets that are in place now and number of immigrants and students that are coming into the country, real estate market is not going to go down. It may be steady and stay steady for a while before whenever that happens. So everybody needs a house or housing, whether they are buying or renting. So I agree with my colleagues that it's not a bubble.
Brett, are you there, sir?
Yes, I don't think there's a bubble at all. I think there's going to be a lot more people coming into Canada. The true numbers is not what the government is actually saying. If you listen to Benjamin Tal, the numbers are a lot higher than what the true numbers of what the government is saying. People still need to live somewhere.
Right.
They can't live on the water. They can't live on the greenbelt yet. So housing prices will continue to go upwards.
All right, well, thank you. Well, in my opinion, you look at the numbers, the shortage of the housing. The only thing which is a bit of a red flag is the affordability. Second red flag is the interest rate hiking gone way too fast, way too quickly. It got everybody off guard. Not a lot of people were not prepared for the height. And third or fourth thing, which I do believe there will be a pressure based upon the bond market and how the other rest of the US is acting upon us. I do believe that if there is an adjustment, it will not be a drastic reduction. The inventory is definitely building up compared to last couple of years in a row. And I do believe that one has to be cautious enough that if you're investing in any kind of real estate in Canada, if you're able to get much better rates, or if you get owner financing, and if you are selling a piece of property in this market, and you want to sell it for the top dollars, you can talk to David Grossman or Randy Goodman and see if they can introduce some incentive. That incentive could be mortgage buy down, which is not that expensive, but it makes it very attractive for people to qualify. This is what happens every time when you're going to buy furniture from the bricks or something, no payment for next 3 years, but all the payments are added up in the price. But I do believe that a lot of builders already are on the drawing board, figuring it out what strategy to use to get the whole market rolling again. I sincerely want to thank anybody else. If anybody else like to add something, that would be great. We are still waiting for one of our guests, actually, Jerry. I'm not sure if he is able to make it tonight or is he not. I don't see him lined up yet. But in the meantime, I also like to ask one more question. Leonard, are you there, sir? Leonard. Oh boy. Leonard, can you talk?
Yeah, I can hear you now.
Okay, what do you think?
About
The market bubble as we speak?
it's hard to say it's going to be get bust or not, but only thing is that what we seeing in the market is like, even the leasing is we do a large amount of leasing also, then it's having a problem with the leasing also. People not able to get the places. So with the immigrations coming in more in place, I don't know what's the government going to do about that. So regarding the housing bubble goes, I don't think so, but I know we are having a crisis of even finding a places for people.
There's a rental prices.
yeah.
Is that correct?
Yeah, even the rentals also. Like even we even see that. I mean, I've been doing for a long time, but right now this year, lately we've been seeing people are even giving 1 year upfront, still not getting places.
Interesting.
Yeah, and some landlords are being very picky, which is, it should be, because given all the things happening outside. Even for the housing that we have few clients we're working on, that are in the Durham region side, a lot of the clients going through multiple offer, and we still not able to find some places for it.
Interesting.
But the commercial side is totally different. The commercial side is,
Yes.
people are, able to get some good prices out of it. Some other than the larger properties, some smaller ones are like moving furthermore. And a lot of people are, even like builders that we work with, getting into more land developments and stuff. They're looking into it, but for the future one. But other than that, for the regular clients wise, the leasing wise, we have so much of going on. That's nothing much happening for the clients, and same thing for the regular residential clients that we have. Some of them are able to get it. Some of them we having a still multiple offer going on. Then we're not able to find the property that they want.
Thank you, Leonard. Appreciate that. I'm going to move forward with the next thing, luxury condos. Okay, I'm sorry. Some of the luxury condos, they're slashing their prices. Some just to, hey, this is something I shared with you. Some of the condos are the one, in my opinion, as we speak. The inventory is increasing quite a bit. A lot of speculators who bought the condos, hoping to rent it out. It's a fairly negative cash flow. That's one of the reasons you'll find from time after time that some of the condo prices may gonna take a little beating, maybe 5-10%, because the rents cannot support the mortgage payments. And some of the speculators, not investors, I will not call them, because they're in and out for the market, and they're feeling their personal mortgage payments are gone up. If they have borrowed money on HELOC, that money's gone up quite a bit. And that's the only challenge I see in the market more than anything else. Of course, there are some other challenges where people's salary is more or less the same, and the mortgage payments are gone up substantially though. But again, this is something nobody was prepared for it. There are going to become certain victims of it. They have to sell. And again, the banks are cooperating as much as they can. But when it comes to private lenders, that's a different ballgame altogether. So we're going to introduce my sister, the best 10 times the international speaker, the best international best-selling author, publisher, and my good, I will call my good sister, Randy. It's all yours. What would you like to share tonight?
Thank you, my brother.
Right.
I love it. Okay.
Hi, Randy.
Hi. Okay, so a little bit about what's going on in the market. I mean, you heard a little bit already, but our August report is sales. So year over year, comparing this year's August to last year's August, sales are down a little bit in August, and everything's always slower in July and August anyway, but just a little bit down, 5%. New listings were up though, which is nice. They were up 16%. And the average price was just about the same. So that's fantastic. And the days on market were a little bit longer than they were last year. And that's probably because of the interest rate continuing to go up. And then month over month, August held pretty strong. It went down a teeny bit from July, where we were having a slow, gradual increase every month since January. August did come down a little bit, but we expect that to change and stay strong for the rest of the year anyway. And then I wanted to talk to you guys about, and yay, no new interest rate this month. So it didn't increase. Yay.
Yeah, that's good news.
Yeah, yes. Okay, so I wanted to give some tips to investors or potential investors So you might want to write some of these down that resonate with you, but determine what your goals are. What is it that you want to invest in? Is it residential? Is it commercial? Do you want a cash flow? Do you want it to appreciate? Or, what are your goals? Think about what your goals are and write them down. And then you have to assess your financial situation. So you have to figure out what can you afford, or if you're working with investors, what can you collectively afford to do? Who's going to be on the mortgage, et cetera, et cetera. Also your risk tolerance, what can you tolerate? What, if things don't go the way you want it to go, can you risk it? Can you handle no payments for 6 months or a year? Figure out what your risk is. And you should have some experts around you that can help you figure that out. Put money away for a deposit on a purchase and for maintenance fees on any property. Improve your credit score, because the better your credit, the better your chances of getting a lender to loan money to you. Another suggestion is to buy a home to live in, because you'll be in it long term more than likely, and over time it will appreciate. Build equity. Oh, you can also rent out your basement if you want more income on it. Buy a home to live in. Build equity in your home, and then you can actually borrow against that house. So you can do a HELOC or other types of borrowing, but you can borrow against the equity you have in your house in order to invest in other projects. And don't limit yourself. Don't think, oh, I can only do this type of thing. Be open-minded and, see what's possible for you. Improve a property once it's purchased. So do any updates, renos, improvements, inside and outside. Don't forget the outside of a house. Okay, you might improve the appliances or the furnace, the air conditioner, there's the windows, the floor, anything. There's so many things to improve. Understand what your costs are. So before you get into a project, really understand what they are. You want to consult with a contractor to get a really good idea of what your materials and your labor are going to cost based on what you want to do to the property. What type of investment do you plan to do? Do you want to buy and hold so you can rent it out? Do you want to renovate and flip? Like, what is your goal in the investment? And how quickly do you want to turn it over? And what are the tax implications of your decision? So you also want to make sure you've set everything up, which is why you want to have professionals around, so that you minimize on your tax and maximize on the money in your pocket. And you really want to have a good team of professionals around you: lawyer, accountant, financial advisor, realtor, mortgage broker, contractors, a general contractor, electrical, plumbing, drywaller, tiler, all those people you want to have around you in your circle. And you want to keep your emotions at bay, because this is a business decision. It's, I know when you're buying your house that you're going to live in, you're more emotional about it. And a lot of people make emotional decisions. But when you're doing it as an investor, you're making a business decision. So you want to try to keep your emotions out of it. And be smart about the type of property you wish to purchase. Will it cash flow? Will it appreciate? Can you do something to make it happen? And also consider the vacancy rate. So what happens if you're not leased or rented out the whole time? Can you still handle it, or are you going to be in trouble? If you're taking on partners, do you have a binding written legal agreement in place? You want to make sure that you're covering your tush on all areas. You want to understand all the risks. And if you wish to be a landlord, get familiar with the rules and regulations in your area. You do have to know exactly what your responsibilities are, what the tenant's responsibilities are, whether it's commercial or residential. So make sure you get familiar with that. And so that's all my tips for that. And if you are interested in any information on making an investment or a certain area or property, or you have something you want to sell, I deal with commercial, residential, pre-constructions, assignments, do everything. Love to answer any questions you guys may have. So feel free to reach out to me, and thank you, Navtaj, for the opportunity.
All right, thank you, Randy. Appreciate it. Thank you so much for sharing so much. And so little time, every single word is like a gold nugget. It's just like they don't come that often. And again, when you're investing in real estate, you got a plan and you have to have the team of your entourage. The entourage, who are these people? Who are they specialized? The realtor, whether it's a mortgage broker, your financial planner, your CPA, to your other people, whatever you need in the team. We'll talk a little bit more about it as we go along. So we also want to bring our great lawyer, very well-known, very well-respected lawyer, Jyoti Chaudhary. She has a law degree from 3 different places, from Canada, UK, and India. And she has been practicing law for a long time and very helpful person, easy to speak to. Jyoti, what would you like to share tonight?
Thank you, Navtaj, for the really nice introduction. I would like to share some points which we should consider before buying a pre-construction home or a condo from the builder. A lot of people, whether they're investors or end users, they like to get into a pre-construction condo or a pre-construction home from the builder for various reasons. One reason is probably the long closing. So they're able to save up some money and pay in installments. And the other reason could be that, people, some of them would like to have a brand new construction to live in. So whether you're an investor or an end user, you may want to invest in a pre-construction home or a condo from the builder. Now, I'd like to suggest some points for you to consider before you do that. So your purchase agreement is one of the most important documents in your new home buying process. This purchase agreement is a legal and binding contract between you and the vendor, that's the builder. So it is very important that you have a lawyer review it before you sign it. Also, your lawyer can help you understand the addendum attached to your purchase agreement, which includes closing dates and potential delays, closing fees, and other possible costs. Your lawyer can also explain when your agreement may be terminated if that happens, how your deposit will be protected under the addendum. So normally what happens is you have like a 10-day period for the lawyer's review. And if you were to come to me, I would review the purchase agreement, complimentary if I'm, being put in the contact list of the builder as your lawyer. And the other thing for you to consider, it's to research your builder. Builders, there can be very big builders for whom you may not need to do research. But if there are small builders, you have the Ontario Builder Directory. It's an online resource that can help you confirm if your builder is licensed to build new homes in Ontario. You can also use the directory to learn more about the builder. For example, how many homes they built, what the claims history is, and in the case of condos, what projects are underway or have been completed. A feature recently added to the Ontario Builders Directory is conviction search, which allows you to see whether a particular company or individual has been associated with any illegal building convictions during the past 10 years. So even if it's a reputed builder, my suggestion would be to research your builder just to see that, he has a clean record and there is no conviction that he has been subjected to. The next thing for you to know about for a new home is the warranty coverage. You have the Ontario New Home Warranty and Protection Plan. And it covers, among other things, workmanship, materials, Ontario Building Code violations, water penetration, and defects in your home structure and systems. The warranty coverage is broken up into 1 year, 2 year, and 7 year warranties, and is important to understand what type of defects and conditions are covered during each warranty period. Now, with the Tarion program, you will also be subjected to the pre-delivery inspection. So before you take possession, you will have an opportunity to walk through your new home with your builder to make sure that nothing is missing, damaged, or incomplete. And what you can do is review Terran's PDI checklist before your walkthrough, so you'll know what to look for. But that's a general guide, so you should have your own checkpoints based on your property and its unique details. So it's good to go around the house and look for little things that should be repaired or should be improved upon, or anything that is incomplete. So that is the new home owner's warranty for you. And then if you're buying a pre-construction condo, uh, it's a slightly different uh, contract than buying a pre-construction home, because there are two closings basically for a condo. One is an interim closing and one is the final closing. Now, what is the interim closing? Interim closing basically means that the condo is ready for occupancy, which means that you can occupy it, but the title will not be transferred to you. And during the interim occupancy, you will pay the builder a stipend, kind of an amount that will be close to the ownership cost of that unit. This stipend is calculated based on a mortgage of 80% plus maintenance plus property taxes. And interim occupancy usually lasts a minimum of few months, as long as sometimes it could last as long as 2 years. On average, it lasts about 6 months. But what is important for you to remember is that during interim occupancy, the unit does not belong to you yet. And you're not entitled to rent the property or complete renovations unless you have written consent from the builder. If you buy the condo as an investment, it's important to get permission to lease the property during interim occupancy added to the agreement. The other thing to consider in a new home is the HST part. All new condos and homes are subject to HST. Fortunately, builders add this HST into the advertised purchase price. And then what the purchaser does is he assigns a rebate to the builder, which means that basically the builder is going to apply for the rebate himself, but he's going to give you a price reduction to the effect of the rebate. So the maximum amount of rebate that could be given is 24,000. And if you're going to occupy the property as a primary residence, then you get the 24,000 rebate. But if you're an investor, you have to pay those additional 24,000, but you can claim it later from CRA if you are leasing out the property. So it's important to know what you intend to do with the unit, and it's important to give the builder that information, whether you're going to use it as your primary residence or you're going to lease it out, because then he will know whether he's going to give you a reduction on the price to the amount of 24,000, or he has to add the 24,000 to the price, and you can later claim it from CRA. So I hope these points were useful for you. And like I said, I'm always available for reviewing your agreements with the builder. And you can contact me anytime. You have my contact information. Thank you.
All right, thank you, Jyoti. Thank you so much. Appreciate it. Whenever you are buying a piece of property, especially when it comes to real estate from a different builder, each builder might have a different contract. It's better to review it before instead of after. So there's one famous saying goes in, when should you consult a lawyer? Before or after? Always, always before. Before, it'll be a lot less. If you meet it after, now you're looking at litigation. Much higher, it's time consuming. Always, always make sure your contracts are reviewed by your lawyer, period. No if, no buts.
Like they say, prevention is better than cure.
You're absolutely right, especially when it comes to law in Canada. It's very expensive, it's time consuming, it's frustrating. And if you're not careful, you're going to get caught. A couple of builders have been already blacklisted. There was a latest news today and yesterday, and there are a couple of builders got convicted as well. And just be aware of it, and things happen, and sometimes people have lost tremendous amount of money. If you look at the news carefully, I'm not going to get that tonight, but let's move forward with our next guest speaker. Taxes. Here's my question to you, all of you. Feel free to put a Q&A and I'll be happy to answer for you. When you're working for somebody or working for whatever the business you're doing, what percentage of income go toward the taxes, toward income taxes alone? An average Canadian family. I'm not talking about in personal about you, an average family. How much money is left them for the food? That's shocking. That 43% to 52%. Then how much money do you pay toward the bank for interest on your mortgage or the rent? What's the percentage of that money go towards the bank or rent of your salary? Is it 20%, 30%, 40%? Whatever it is, these are the two major expenses you have, and there are ways to help these things out. And next thing I'd like to share with you about public health. People say, oh, we don't pay for it, it's free. I'm sorry, you are paying for it. There's no free lunch out there. When people say Canada has one of the best healthcare system, just thought I should share with you that you will pay a substantial amount of money. For $17,000 of your tax money goes towards your health, by the way. This is something which I like to share with you. An average Canadian family will pay about $64,000 taxes. All the work you do till June 19th of this year, every single penny you've earned gone to the tax man. It's called Tax Freedom Day. Are we living in a country where we have paid a lot of taxes? Is there a way we can change it altogether? Is there some way we can get a relief from it? What's the difference between an educated, well-educated professional real estate investor and what we are capable of doing it legally, morally, and ethically, though? So this is something else I'd like to just share with you. Who pays the more higher taxes compared to all 10 different provinces in Canada? And who pays the highest amount of taxes, by the way? There is a misconception among Canadians. Oh, the top 20% don't pay too much taxes. Oh, whatever, what's the minimum tax we pay? What is the rock bottom one, the next one, the middle one, the next one, and so on? This information I'd like to share with you. And what do we pay? Tax on top of taxes and taxes on taxes. And by talking about the taxes, there is a strategy, we always talk about it, separating the dog from the sleeping giants. How does it work? How do you formulate a strategy for yourself, and who can help with these strategies though? This is something else I'm gonna just skip it for the time being. We also make you aware, if you own a piece of property, what kind of tax credits you can get. For us to see, there are a lot of people are doing something which is, in my opinion, not legal. In case you want to report that matter to the CRA, here's the number, but I'm going to get back to this shortly. I'd like to introduce one of the most respected person in the industry. He's licensed in 5 different separate regulated investment marketplaces. Ladies and gentlemen, here's gentleman Jerry Hogenhout. Jerry, are you there, my friend? Jerry? I see you on the line here. Okay.
I know he was delayed, Navtaj, so I don't
He
know if
logged
he.
in actually. I just saw
Okay.
him logged in and oh boy. I think we're gonna wait. In the meantime, what I'm gonna do is I'm gonna move it on to our next speaker. Do you need to renew your mortgage? Will the rates go up or down? So these type of questions can be answered by our person who is right here, and he will also walk you through a little bit before I bring him in. David Grossman is the gentleman who has tremendous amount of experience, very well respected in the industry. I call him a brother from another mother. So David, is all yours tonight, my friend. We're gonna wait until Gary comes in then.
All right. Thank you very much, Navtaj. It's a pleasure as always. You know, sometimes I get the weeks mixed up. I was all ready last week on Tuesday, and then I realized that was a week early. That's not the first time, but I guess it's a good thing because I think the next day we found out what the Bank of Canada did. And for once I was right, they did not increase rates. Let's talk a little bit about the rates right now. So it's kind of an interesting time because on the one hand, inflation is not as low as they would like it to be. It's still in the 3 to 4% range, where the ultimate target is to bring it down to 2%. So there are reasons to continue to raise rates, but most people think that they will not raise rates. I think the experts are saying that the next go round, which let's see, when is it? It's in October, I think, is the next meeting, that the Bank of Canada, October 24th, that the Bank of Canada will not increase rates again, but the economy did shrink. So on the one in the second quarter, there was which was surprising to some. So even though inflation is still higher than they would like it to be, the economy did actually shrink a little bit. So, you know, it's interesting. We're getting to, I think we're getting close to the point again where people are going to start saying, well, should we be going with a variable rate mortgage? Because I do think we're near the peak. The experts, or at the peak, the experts think that's the case. Even if there is one more increase, let's say, I think rates will start coming down next year. So if you do lock in, you should go short term. Three-year term is attractive right now. But you could go even shorter term, but the rates are quite high on the shorter term mortgages. We're doing a 3-year insured money now at about 6%. That's on an insured purchase. And so now what to do when your mortgage comes up for renewal? So what to do is that you should always shop around. So keep a couple things in mind, that if you do move your mortgage to another lender, it is possible to transfer it to another lender. You will have to qualify all over again. So if you're still in a strong position from a qualification standpoint, meaning that you're still employed and your income is good, you can move. And you should always think about when is like to get a line of credit. If you have equity in your property and you're going to qualify, and you don't have to use it because line of credit is tied to the prime rate, which is high now. As we know, the prime rate is 7.2. But the time to get a line of credit is when you can qualify for it. because in a year or two, when it goes down, if you need access to that money, you can have it. I get borrowers, they come to me, and some of them are retired now and they have equity and they want to get access to the property, to the equity in the property, which we can help them do always if there is equity there, but it's more challenging if they don't have the income. We can still do it if there's equity. There's reverse mortgages, there we have net mortgages, they're called net worth products, which means we'll look at a person's liquid assets and consider those as well, in addition to any retirement income. But the best time to get a line of credit is when you're employed and you have healthy income, whether you need access to it or not. So that's something that you should always consider at the time of renewal.
David, I got two or three different questions for you.
Sure.
I got to put you in a bit of a hot seat. Number one is some builders that have introduced called mortgage pay down or pay down mortgages, and they are asking the buyer to buy the property. Let's say the current rate for 3 years is 6%, and they say buy it for 3 years, you will be only paying 3%. Is it getting a little bit in the market yet, or is it still brand new?
Well, those kinds of offers have been available for a while. And I think, really, I think it's by and large, it's a gimmick.
Of course.
Right. So, if you're expecting your income to go up later and you're going to benefit by having a lower mortgage rate now, then it's something to consider. But I mean, the price is going to be built in there into the house, and they're not giving away anything for free. But it's tough now for new construction because the costs to build are very high. There's delays getting materials, hard to find labor. Nobody wants to work anymore. The development costs are high. So compared to the resale market, it's a challenge for builders right now. So they got to basically come up with any gimmick they can think of. So, I mean, don't buy a house for that reason alone, but if you're buying a property and you see that improving your cash flow for the next 3 years is going to be a big benefit for you, then that's something to consider. But as long as you know that you're going to qualify, you're going to be able to make the payments after the 3 years are done.
Well, what you are saying is correct, but on the other hand, when I spoke to one of the builder, he said, I'm able to move my inventory really fast. That's number one, that he's able to get in and out. Of course, he's prepaid, and he says he's taking a little bit beating on the profit. At least this way he's able to move to the next project though. So there might be both things to it. There may be a gimmick to it, but also there might be a discount offer to a new buyer who may not be able to qualify or so, but somehow they feel that with new payment plan, they might be able to afford it easily and so on though. So I got a next question for you. This is going to be a tough one. And we heard the hype about negative amortization. Some people have got themselves in a pickle where they are saying it's going to take them 90 years, 60 years, 50 years, 40 years to pay off the mortgage. What would you suggest to those people who cannot afford to make extra payment because of the limitation of the income, and they're adding up more debt towards the existing principal?
Okay, so first of all, I'll give you a statistic that I read today. CIBC has $50 billion out in non-amortizing mortgages right now. Wow. And so that came about because of many clients who were on a variable rate mortgage who basically hit the trigger point, right? So these were variable rate mortgages where the payment did not change even when the prime rate went up. So eventually they get to a point where they're not covering any of the interest. They're not covering any principal, I should say. They're only covering the interest. And in a case where you have borrowers who are in a negative amortization, the banks are calling those customers, especially, to see what can be done. And the reports are that by and large, so far, the banks are not seeing a lot of delinquencies as a result of people renewing at higher rates this year, and also from people who are at that sort of trigger point where they're either at a zero amortization or negative amortization. And I would say, look, as long as you're gainfully employed, I would not panic just because you are only able to afford to pay interest and nothing towards principal. I mean, rates are very high right now. So if you're healthy and you have a good job, and all you can do is cover the interest, as long as your bank is willing to work with you on it, then I would say just ride it out. I mean, if you can make extra payments towards the principal, that's good. It'll help you in the long run. But otherwise, I would say don't panic.
Excellent. Well, those who are watching it, I'm going to ask of all of you, if you can grab your phone, if you want to take a picture of this slide, that if you have about 500,000 mortgage at 5.8%, what will cost you if your amortization for 25 years, 30 years, 60 years, 70 years, 80 or 90, and how much interest you're going to pay on top of it. Just to make you aware, there are certain Canadians who are suffering. It may be minority, I hope none of them, but this thing is more or less coming up on the surface quite a bit. People who are only can afford, like say, $2,500 a month, and now the interest, it may not cover the interest even $2,500 a month, and they can't afford to pay anymore because they're in a fixed budget. There are some Canadians who are facing this dilemma, though. Just be aware of it. Just thought I should share it with all of you. David, thank you very much, my friend, and I sincerely want to say thank you for. What do you think, if the rate will go up in October or down?
I would say that they're going to hold. My bet would be that they're going to hold.
All right, thank you. Jerry, are you there, my friend? Jerry. I do believe he has. Jerry, are you there?
Hi, can you hear me now?
Yes, we can hear you loud and clear. Are
Hey,
you
great,
driving?
finally. All right, go ahead. Yes, thank you.
Are you
Sorry
driving?
for all the complications here for me to attend. Thank you for your patience. So, yeah, anyway, yeah, so what I want to talk about, I appreciate what Nav had said about the Tax Freedom Day, because that's always a concern. Certainly, this is a very high taxed country. We all know that. All the more reason to really be more creative and, dare I say, aggressive to a certain point within your comfort level. So when I say aggressive, again, I remind people that the Income Tax Act, half of it is written in black and white, clear to accountants like us, that what we can and cannot do. There's the other half that is written in gray, which is interpretive and gives us avenues to maybe make tax decisions that are a little more favorable to us as opposed to CRA. It's not illegal. We don't do anything illegal, but just understand that there are things that you can do that certainly can save you tax if you're willing to take a little bit of what we call audit risk. What is audit risk? Audit risk is finding your comfort level for accounting for items in a certain way, knowing that CRA, when we file a tax return, our tax return in simple terms, stays open at CRA for 3 years, not 6, not 7, 3 years for them to have a closer look and possibly do reassessments. So when we talk about audit risk, those are the things that we talk about. For example, let's just say we're all real estate investors or wannabes. You buy a house and you sell it. Okay, you buy a house for $200,000, you sell it for $300,000, you have made $100,000. Now, most of the time, you would say that's a capital gain. And most of the time that would be a capital gain. Capital gain, as we may know, or I'll explain to you, half of a capital gain is non-taxable. The other half, if the property is owned personally, is taxed at your marginal tax bracket, which can either be 20%, 30%, 40%, or 50%, depending on what other income you have. Or in a corporation, if the property is owned in a corporation, it is taxed as passive income, taxed at 50%. Okay, so now back to my example. We bought a house for $200,000. We sold it for $300,000. If it's in a corporation, let's just assume, again, we've got $100,000 capital gain. Half is tax-free, which means 50% is what we call a taxable capital gain. So we're left with $50,000 to put on the corporate tax return, and we pay 50% of that. So we send CRA a check for $25,000. Okay, so again, if this property is in a corporation, we sell it for $300,000, we paid $200,000, we have $100,000 capital gain, and we send $25,000 to CRA. Now, what if in that very same scenario, someone like me said, well, is it a capital gain, or did I intend on doing this as a business activity? Okay, if I choose to account for it as a business activity, the tax rate is now active income, taxed at 12%. Okay, back to my example. I paid $200,000, I sold it for $300,000, I made $100,000, and I'm going to file my corporate tax return and say that it's active income. This was a business venture, and I'm going to pay you 12%, not 25%. I'm going to pay you $12,000. Okay, I've just saved $13,000. Okay, I filed a tax return. The CRA gets it. They issue a notice of assessment that they've received it, and they have 3 years to challenge my transaction. And I could even possibly win that argument if they do. I probably would. I'm pretty good actually at arguing with CRA in these cases. So there's an example where, we know all about Tax Freedom Day. We know that we are very high taxed. There's an example where with a little bit of, a little bit of creativity, a little bit of accepting audit risk, we've just saved $13,000, okay? So these are just things that I want to highlight to people, certainly not trying to make you an accountant, but just understand that there's areas, we're all real estate investors. In my practice, the real golden nugget is the 12% tax rate. In a corporation for active income, there's active income and passive income. Active income is taxed at 12%. That's a nice low corporate tax rate. And we get that 12% tax rate up to $500,000 of taxable income. So anyway, just, appreciate Nav bringing that up about the Tax Freedom Day, because it's certainly reality, and we got to do everything we can to minimize that. We want that Tax Freedom Day to be March or April, not June. So anyway, that's my contribution. Thank you for
Thank you, Jerry. Appreciate
up
that,
with
my friend.
my schedule here. So thank you.
I understand. I think you're still driving, I believe.
I pulled into my parking lot right now.
All right. All right. Thank you, Jerry. Appreciate it. Once again, Jerry Hogenhout, if you want to check his website, CanadianInvestmentServices.ca. As I mentioned earlier, he is one of the very rare Canadian who have 5 different separated regular investment marketplaces, and he is active super active real estate investor. So given a choice to you, you have somebody who knows exactly what you're doing and how you're able to figure it out, your taxes, and there's a lot more goes into it than what he mentioned, but you're welcome to see and speak to him directly, and we'll take it from there. So we're gonna move forward with our next thing is about real estate. We're gonna wrap up a little earlier. So what happened to Toronto? Average house price dropped by 35,000. Okay, what does that mean? What happened when those people who bought in the houses in 20 and 2022, when the interest rates were extremely low, now they are saying their mortgages have gone not double, but almost triple. That's the story. You hear it from all the time, including investors, speculators, homeowners, first-time buyers, or people who have been in business for a while. And does it affect us all? Absolutely, it affects us all. And there are some distress sales in certain areas of GTA. GTA market is divided into many different zones, and you'll find there are certain areas where you can have multiple offers. There are other areas where the properties are sitting down for a while, though. Tonight, I'm going to share a bunch of information with you, which is all over the places for a reason. I don't want you to say that I have one particular topic. I want to cover a lot of areas. Even the $4 billion federal government is thinking to invest your money towards addressing the housing shortage in Canada, though. So what happened in Vancouver? Now they are saying the market is rebounding back. Now, if you notice it very carefully, an average house price in Vancouver, which is Vancouver and Toronto, are the two markets where we focus the most, and more or less they set up the standard for everything for us. The benchmark price has gone up by 20% compared to Toronto. Toronto, if you look at it very carefully, the market value, the benchmark home prices have gone up by 53%. So keeping in mind, when you're thinking about investing, whether it's Vancouver or Toronto, that's where the majority of investors are, either GTA or so on, be aware of your numbers before you invest, by the way. This is something when a lot of Canadians are going to be facing the music, whether you are fixed rate or whether you're variable rate. Those fixed rates, those who have locked up the rate, this is great. But now when it comes to renewal, when you had a rate at 1% to 2%, now you're going to be renewing it at 6% for 3 years. You may gonna find your payments are gone 3 times. What happened to variable rates? Variable rates, anybody who had a variable rate have gone through the pain tremendously, because based upon what? Based upon the interest hikes. So this is the two different scenarios. Some people say, oh, I'm okay because I got a fixed rate. Okay, you are saved for next 2 or 3 years. What happened when you're up for renewal? Would you be able to afford it? It's different story when it's your principal residence. What happened to your investment properties where you only have $500 negative cash flow or $500 positive cash flow? Would you be able to have another $2,000 or $3,000 negative cash flow? That's the reason you'll find the dumping begins now for the condos, pre-construction, for those who are speculators, and they are coming in very heavily though. Where these condo sales are coming from, this is from Toronto Star, by the way. It was a couple of days ago. What are they saying? The bulk of new listings are coming from so-called speculators. The sales are almost up by 8%, and more or less they're saying the prices have dropped by 60,000 from May. Now, how do we manipulate the figures or facts? But there is some truth to it. Be aware of it. If you're looking into investing in a condo, this is the time where you're able to have a little conversation with the seller, see if you could have a decent price, and if this condo is going to have a positive cash flow for you. Are we in? Those who may not be aware of it, I like to take you to memory lane. This is where I got into business. Inflation. Inflation dictates interest rates. 1981, month of August, when I got into business of real estate, inflation rate was 12.5%. What was the prime rate? 23%. Did we make money? Absolutely. If you are successful professional risk investor with a bit of education behind you, you understand the basics, the fundamentals. You're not just going with it because your friend said so. This will change altogether for you. Now, what was the reason for it? Oil prices. Now, what's going to happen now? Oil prices going up again. What happened to Saudis? They say, hey, we are not going to we're going to reduce the oil production. What's going to happen to Canadian oil prices, gas prices? They're going to go up. Would we be able to contain the inflation? We will see. And that's something where I still believe that there is a possibility of interest hike if the gas price goes up. That's going to add up a little more fuel in the form of inflation. We are not seeing inflation coming down dramatically yet, but our numbers are pretty strong. Employment is pretty strong. New Canadians coming in pretty strong. Yes, we have a shortage of houses. We have a huge rental prices all across Canada, but there are certain factors which have caused us a lot of grief in the 70s. Those who might understand, maybe one day I'll do a little presentation about how Alberta came in the picture, what happened in the 70s, and how the boom got busted in 74, in 1981, 1983, and what were those factors. So one of the key factors you must remember, inflation. Only think about 1981 when inflation rate was 12.5% and our bench prime rate went about 23%. Just a history lesson for all of you. So what are the facts about real estate market as we speak? Randy was able to clarify it very nicely. What are the number of properties available? How many properties are available? Ontario, about 40,000 altogether. And how long it is taking them? Just a little chart I just thought I should share with you. Some of it may have interest. The rent is gone up. Toronto rents have risen about 5 times faster than any historical trends. That's kind of a good news in one way, but it's also hurting those people who want to rent your condo or a house altogether. It has a ripple effect, whether we like it or not. We are getting more money from rental, but we are paying a lot more money to rent the money for the rental property or interest rate. Now, this is not going to go away for the time being. I strongly believe a renters market is going to remain pretty strong. It's going to remain extremely strong regardless though. And those who are renting it, I'm not sure what kind of strategies use. Are you renting it as unfurnished unit? That's not the most clever or best strategy in my opinion. There are better ways of renting it and getting a lot more rent. And it can help it. Interest rates have gone up since early 22, 10 times. We discussed about it. And that is hurting everybody, including business, your personal loan, your HELOC, your loans, you name it, anything you borrow. The cheapest way of borrowing money always is one way. The cheapest way to borrow money is the first mortgage on your principal residence. Remember that. Now, this is something, this is the headline. Sometimes you see it on the news and that kind of throw you out. This was recently, again, the media intend to have this headlines. This couple have the mortgage payment has gone up at $27 a month. How many Canadians can afford that $27 extra payment? How does it affect us? It has a ripple effect, as I said earlier. All of a sudden, your payments are gone to $6,300 compared to less than $2,500. That's a substantial amount of money, by the way. How the Canadians are coping up with it? It's a good thing the market is strong, Good thing is the rental market is way too strong. Some of the Canadians are still struggling. And here come the term sandwich families. Now, who's living in the house? 3 families: parents, grandparents, and the children. And now the new stuff have came in BC. You can convert your single family home to 4 units. Now they're also allowing it in GTA area. And you should look into is if you're an investor or as a homeowner, hey, can I look into my house? Can I do the house hacking? Can I live in my own house for free if my tenants pay enough rent? Just thought I'd just share an idea, just something to think about it. How about house hacking? Can I turn my rental properties and have extra income? The word we just use a lot is called forced appreciation. Can you increase the value of your house? Can you increase the cash flow? The answer is yes and yes. There are different strategies for it. Forced appreciation is a great way for investors, for homeowners to survive, where you have to pay extra $2,000-3,000 a month. If you have certain strategies, the pain will be a lot less. You need to become educated. You need to understand the current situation, the knowledge, and learn from those who have been there in business for 30-40 years. That conversation can save you a lot of money and put you ahead compared to a lot of other people, though. So what is affordability to return to Toronto? That's a question. By the way, the credit union Desjardins, I can have difficulty pronouncing it. They're expecting something different. And they're talking about a recession. They're talking about pricing drop by 30%, which is very highly unlikely based upon all the current facts we have, based upon the current market value. I don't sense that way. That's why we have a little discussion. Would I be able to come back? What would be the situation? Why people are selling? Why they don't have to sell? Here is your tax dollar money. Is the new program called Housing Accelerated Fund, $4 billion. Now this is the regions or municipality can apply to create an affordable housing program. Now you can check with the city, wherever you live, and you want to generate or create a rental unit under a program called AHP, Affordable Housing Program. See how much money can you get, which can be totally forgivable. Again, you can check with the city. Listen, I have a house. I want to turn into 3 units or 4 units. Can I have a tiny house? Can I turn into my garage into another unit? Can I have a coach house? Can I have a laneway house? And if it is, what kind of money is available for me? Extremely important. Check with the city. Call 311 if you live in the big city. That can add up a lot of interest for you. Now, this amortization we talked earlier, this is something which is a lot of investors and speculators into trouble. They can't get ahead. You know, well, what are you going to do? Now they are dealing with mortgages. Instead of paying in 25 years, now they're looking at 30, 40, 50, 60, 70, 90 years. Yikes. Now all they're saying is RBC, the 43% of mortgages carried amortization more than 25 years and 23% over 35 years. What does that mean? You have to pay a lot more interest for a lot longer period. That's not what we want. As a Canadian homeowner, you want to pay off the biggest debt of your life as soon as possible. So there are different strategies you can do. One of the strategy which works extremely well for majority of Canadians, add up 2% of extra payment if you can afford it. Can you afford to create more income? How can you do that? Forced appreciation. Now, according to TD Bank, this is totally different altogether. 48% of the mortgages are more than 25 years, and 23% of the mortgages are more than 35 years. More interest, delayed savings for retirement, and people might have to work till 70s, 80s, or 90s to pay off these mortgages. Now, a short term with a longer amortization can help real estate investors reduce the monthly payment, but that is good only for income producing properties, not for your principal residence though. So be aware of it if you are having a conversation with your bank or whoever the lending institution is, or you happen to get caught in those scenarios where your amortization has been extended. There are certain techniques you could use. We'll be happy to share with you. And that can be extremely, extremely helpful for those Canadians who are facing the challenge. And we are happy to assist you and help you and tell you what to do. So these are some of the markets where people are feeling, okay, where should we go? At one time, we never thought, oh, we're going to move to Northern Ontario. Guess where the most affordability factors are now? Sault Ste. Marie, North Bay, Thunder Bay, Sudbury. By the way, Thunder Bay have done extremely well. Sudbury, Windsor, St. Catherine, Kingston, London, Niagara. It's not that bad comparatively if you look at the ratios and the sale through selling ratio as well, which is pretty reasonable. Now you may be surprised that when it comes to St. Catherine market, what kind of market is it? Is it a buyer's market? Is it a seller's market? Or is it a balanced market? Kingston, London are balanced markets, and bunch of market Windsor is still a buyer's market, by the way. St. Catherine and Niagara Falls, still a buyer's market. So we're thinking about getting into any kind of this business. Look at all the facts. Your realtors have a lot of information, by the way, and they can share with you. Just don't buy it because whatever. Do the research on it, go back and forth, and you might be able to save a lot of money and able to do a much better investment, knowingly what exactly is happening in the market as we speak. So again, we look at other properties which are in Ontario, whether it's at Peterborough or Ottawa or Waterloo, they're all balanced market. The seller market is still, Oshawa is still going pretty strong, by the way, for the sellers, as well as the Orangeville. Again, these are the satellite market, we call them bedroom communities for GTA, where people like to go a little bit away from Toronto. And Clarington, that's one thing I'm surprised that it's in as a seller's market, by the way. Aegis Pickering, all again seller's market, be aware of it. Just thought I should just share with you. The most affordable cities, Sault Ste. Marie, North Bay, Sudbury, Bancroft. By the way, I never thought people would go to Bancroft or Kingston. The last conversation we had a couple of years ago, that when people start moving from Toronto to London or Peterborough, 130-kilometer away, take them an hour and a half to go to work, or 2 hours. Now it's becoming kind of norm, and now because the GO train is improving a lot, and now I notice a lot of people want to raise their children, especially of young families, far, far away from Toronto. Again, they are not buying the property there. Some of them are renting it. They have decent jobs, but they just want to have decent life instead of only focus on your work to pay the taxes, and next thing you are paying towards the mortgages or the rent. Sad, but truth, but painful, very painful. Some of the, I'm going to skip this one for a purposeful reason. I'm going to just go to, if you happen to have a TFSA, tax-free savings account, where are you investing? I'd like to introduce a little quick guest for you and see if I can get him. Frank, are you there? Frank Fernandez. Frank, can you talk?
Yes, I can talk.
Okay, Frank, just share with us, if people who want to invest a TFSA money, what would be your recommendation?
Yes, definitely. If somebody want to invest, they can contact me, or they can contact any superstars. My number is 647-668-2277. For more information, we provide you everything, all the detail of the projects and where you can invest, and everything is safe. For further, you can contact me again, 647-668-2277.
Can you please put your name in the Q&A?
Sure, definitely.
Okay, so what kind of return can I expect? If somebody who's really, actually, I don't want to put any of my money in the risk factor, what kind of interest can you expect? What kind of return can they expect on their money on the very low risk? Frank? Yeah, I think he's gone. Well, if you have TFSA, that's the one of the best account in my opinion, for those Canadians who are sick and tired of paying taxes. TFSA, all the money you earn is tax-free. But again, be aware of it. Up to $88,000 can be put all together. Money can be in and out. And they are a little bit careful how much money you're making. If you're turning this thing into a higher amount of return, the CRA can look into it as an active investments instead of passive. So if you're earning 10, 12% or 8%, you're putting the money in first mortgage or second mortgage, or you're putting in a GIC or something, or you're investing in the stock market, be aware of it. This is the only, one and only, in my opinion, rare things available where the Canada Revenue Agency or the taxman would have put the blinders on and say, okay, go ahead, whatever the money you make, it's absolutely tax-free. So those who are not looking into it, you should definitely look into it. And it is, in my opinion, that's the only option we have for Canadians. Definitely earn money, which is absolutely tax-free. Here is a question, and this is for fun part of it. We are the most rudest people in Canada. The rudest cities, number one is Vaughan. Wonder why? When it comes to BC, I cannot pronounce it. Then Brampton, the Surrey, the Windsor, the Thunder Bay, Regina, Edmonton, Sudbury, and Winnipeg. Guess what? Toronto name is not here yet. Even though we are known that the bigger cities, most of the people don't have time. They tend to be rude though. The most common rude behavior, people are on the phone, they don't care, being pretty noisy in the public, not letting people merge in the traffic. That is very normal in Canada by the Toronto. And these are the locations, by the way, not slowing down when driving near pedestrians, that's horrible. Not picking up dogs, oh no, that's not acceptable by any means. These are the cities where we have different type of issues, whether it is Burlington, where people just use unpleasant wording instead of communication. When it's a Burlington, I wonder why. Is it because the bridge? Is it a Guelph? That's shocking. Guelph is supposed to be well-educated. Chatham, Gatineau, Regina, St. Catherine, Oakville, Kingston, Cape Breton. That is Maritime. That's really shocking, by the way. The most polite people in Canada, shocking. Markham. That is absolutely amazing. All right. So average house price in Canada jumped, by the way. And that is still an increment, by the way. Those who have naysayers or some of the people are saying, you have to analyze the market based upon the type of properties of the area. When they make a generic statement, market is up and down, and when they make a statement, be aware of it. For example, when we talk about condo market, people are selling for a loss, and that might be only in certain areas, maybe 416 area or certain part of Toronto area, not all part of it. So whenever you're getting a statement like that, before you jump on any conclusion, analyze it, dig a little deeper into it, you'll be surprised. You'll find something which is a lot more truthful. Listings are kind of down comparatively to last year, quite a bit down as we speak. This is sometimes come in the headline, bloodbath of commercial real estate in USA. So what happened is because of this COVID, a lot of companies did not survive, whether it's a Sears or the Toys R Us, Radio Shack, Bed and Bath, and bunch of other ones as we speak. And even JCPenney was brought into bankruptcy. All these things, there is something in common, but there is a upside to it. All these companies have not been able to modify their business structure, and that has caused a lot of grief. Like this is Crossgate Mall, which is appraised and got sold for 70 cents a dollar. This is common when a piece of property, either in Canada or US, is being liquidated. More or less, you're looking for about somewhere about 60 cents on a dollar. That is quite common. Be aware of it. And opportunities arise like that in Canada too. But in Canada, there's something else is happening though. This is kind of the new cost almost $30,000 roommate in Toronto as the rent price goes up, which is, in my opinion, it took a little dip in 2021 because of COVID, but it came back very strongly. We still have a situation, I do believe, it's going to be 3 to 5 years down the road where you will find any kind of relief in the rental market. If you happen to be an investor and have some rental properties, it's a time for you to think about a brand new strategies. How are you renting it out your units? Are you doing the same old, same old? Then the result will be same old, same old. You want to become creative? Absolutely. Can you increase the rent dramatically? Absolutely. Can you increase income dramatically? Yes. Can you have better quality of tenants? Absolutely. Are you sick of landlord and tenancy board? Most of you might be, yes. So there are hybrid models. I'll definitely discuss with you in one of the meetings. I'll show you how you can substantially increase the rent and have almost 0% default and have much better quality tenants who will keep up your property in much better shape though. This is commercial real estate dropping. Why it happened? Simply because majority of the Canadians who work from home still prefer to work from home. The hybrid model is in, and shopping centers and commercial plazas are on the shopping block. The value is dropping, but what the shopping centers are doing, converting. And they're converting all these shopping centers into condo. It'll be still a shopping center. Some of the recent sales, you might have seen it, or you might have gonna hear it. Some of the realtors, even here tonight, can share with you. Leonard, are you still there? Leonard.
Yeah.
Leonard, can you just share with me on the Pickering Town Center? When did they start selling the new condos now?
Tomorrow.
Tomorrow.
Yeah.
What is the starting price on this one? It's a pre-construction, correct?
They say the starting from 400, but they haven't released the price. Tomorrow I'll get the price list. I haven't got the price list.
And how many towers are they going to build in Pickering Town Center?
Pickering Town Center, there's all together. There's about 5 towers going to come. That
5,000 condos altogether. And how many buildings?
I think five buildings.
Okay, there are going to be 1,000 condos in each building. No, that seems to be high.
No, sorry. I think 1 second. I have the information. It's about.
Whatever you have, you can share with us quickly. That's fine. But I'm just saying the fact is, all these shopping centers are converting very quickly and very sharply. It might be helpful for some degree, but it does not help in rental market or affordability factor. For shopping centers to survive in Canada, the conversion is in place. Churches have already converted, and office towers are on the biggest shopping block. And there's a huge amount of money to be made, even if you are a new investor. Leonard, you have the report?
Yeah, so the price is starting at, we got it about low 500, 1 bedroom. And the 1+1 starting at about mid 500,000. And the highest 2-bedroom going at 600,000.
Excellent. And the
Yeah.
sales from tomorrow, is it a VIP package?
It's yeah, probably come to VIP. I'm just going for the platinum. I'm belonging to platinum agents, friends and family, so we're getting the access earlier. Plus we get the also that I'm sure the VIP also will be the same price list so far.
Okay. Thank you, Leonard. Appreciate your help, my friend.
Yeah, no problem.
Your input. So, how these things have impacted this so-called high rising interest altogether? How are they affecting all across Canada? If you look at Toronto, especially, it has kind of experienced a condo price or have a bit of a drop, definitely. Same thing in BC, decline in certain ways. Ontario condo have gone 16% decrease. Just this is all generic information, by the way. But people, cities like Niagara Falls, Cambridge have a double-digit growth. So when you were talking about Ontario, if you take out Niagara Falls and Cambridge all together, things are totally different. Atlantic Canada, again, detached homes in Frederick, Moncton, and St. John, all have seen double-digit increase. Why? Because you can buy the house for 400,000 or 300,000 there. The Maritimers, Halifax is still good. Montreal, again, experiencing always. Montreal is totally different market, by the way. A little bit decline in the prices. Manitoba and Saskatchewan, when we come to our prairies, and we call Winterpeg at Manitoba, they have done a little bit better than compared to the markets, though. So here is the question. I want you to watch this thing very, very carefully, please. And there are opportunities in disguise. So all these residential complexes are coming around in Yorkdale Mall, Sherry Gardens, Markville Mall, Scare One, Dixie Outlet, Dufferin Mall, Centre Point Mall, Bramley City Centre, Cloverdale Mall, as well as some of the other areas away from Toronto. We just talked about Pickering Town Center as well. And they are building, and that's the only way these shopping centers can sustain. Otherwise, they will not, because they got the land, and the city is cooperating, and all these big shopping centers are owned by only 5 families, more or less across Canada. And you know, most of them, 5 families only control 95% of the shopping centers across Canada. Who is moving to Calgary? This thing is become a hot topic, but there are some people who have moved to Calgary and decided to move further towards Edmonton. Why is that? They're saying Calgary is becoming a little bit expensive, the rents are much higher, and the prices are much, much higher. Again, the shift is there. Edmonton is trying to get into high-tech industry, and it's sort of known for Alberta is known for Alberta beef. And second thing, they're known for the cows. Or third thing is oil and gas. And they also want to change as well towards more high-tech, cheaper way of living, much better lifestyle. And those who live in Calgary know that there is Chinooks in the winter, good place sometimes to raise a family. This is when people make a shift, people move in the form of a herd, whether it's immigration or emigration. Emigration, when people move from within Canada, from one province to another province. This is something which can be creating some situation with homelessness, though. And they're saying that most of the Canadians living in their housing are facing some issues because income is about 87,000 per family, and this is not on the high end. And the median income is about 44,250, which is kind of on a questionable or unaffordable factor, though. This is Some of the Canadians who are thinking to buy a house are dropping out of the market. Our economy definitely moves based upon the people who are first-time home buyers. Some of them are considering to delay not to buy the house till 2024, 2025. So this may gonna slow down the new housing because of the demand and supply. And if people can't afford it, builder may not be able to build it accordingly. But there is definitely a gap, and this will reflect in the coming year or two, depending upon the interest rate and our policies altogether towards housing though. So what the Bank of Canada said, expect higher interest rate until 2025, 2 more years of pain. Even though in the past they said, oh, the bank rate will never increase the rate, and a lot of Canadians get caught up with that. So sometimes it's okay when politicians, or even though Bank of Canada is not a politician, but they are totally independent. But when they make any kind of statement, most of Canadians rely upon it. But most of us get caught, unfortunately, true. But so the brand new condos, they're dropping the price first time ever. Why is that? Because of the fact they need to sell what they want to build. Now there's a new trend coming soon. Instead of buying pre-construction, builders are getting smarter. They say, hey, listen, I'm going to build it, and you just bought it a year or 2 years ahead of the time. You can make the more money, more profit than I am. I'm barely going to make 15, 20%, putting all my hard work, my money, and my investment. I'm taking all the risk. The new buyer comes in for pre-construction, and they're making 30, 40, 50% money on their profit. So the new phenomenon started in the West Coast. Now builders saying, no, we cannot sell it when they're ready. It's called post-construction. So you will see that it may gonna pop into also in our part of Canada as well. This is gonna become quite common. This is some good news about casino built in Rexdale, which is Highway 27 and Rexdale. This is definitely gonna be a little bit of a mover and shaker. Toronto have been struggling for a while to have a full casino. They have built beautiful hotels, spent about $1 billion altogether for a room hotel. They're building a live theater, which can accommodate 5,000 people. And they just want to turn into world-class facility. Instead of you going to Las Vegas, this is the Las Vegas in your backyard in Toronto. This is going to help quite a bit in certain ways. But at the same time, across the street from there, there's a shopping center called Woodbine Mall. I do believe that property was under power sale for $333 million. And I do believe that things might have worked out. I'm not aware of it. If anybody else is aware of it, there's going to be definitely some moving and shaking happening in that area. And you'll find there's going to be a ripple effect. And it's going to reflect on the prices of the houses. And eventually they want to build a hub, a GO train or a subway hub, which is going to be going towards the airport as well as to the city. So that could be a good hub, by the way. So this is another LRT, which is a Glinton LRT, had been around for a while now. And now you're going to see all these things, new buildings going to come about. And this is the infrastructure changes. We talk about all the time about infrastructure changes. How does it affect the price values? So this is somewhere from Victoria Park all the way to Kennedy, or Birchmount all the way at least. This is going to be called Scarborough Junction. And you'll find in that area, if you happen to have single family home, or it can be rezoned, or it can be converted, and about 800 meters of the radius of all these things are going to have definitely very positive impact. If you're looking for a long-term, 3 to 5 years down the road or 10 years down the road, where your properties can multiply, please look into this area. This is another stuff we talked about last time, how your property taxes are calculated. You can have a much bigger house with 4 places, you got tax break. And even if you're a smaller house, you are paying a lot more taxes. This is something one should be careful if you're a developer, even if you're buying into it. That is another area one should pay attention to it. I'm just going to take a little quick break because somebody is asking me a question. Can you please excuse me for a minute? All right, I'm back. Sorry about that. Moving forward, this is a typical scenario where we have seen it again and again. Some of you might be facing the same dilemma, or you might know a couple of family or friends who are facing this scenario where the income is more or less fixed, that they bring combined income 140,000, monthly take home to 8,000, and these are the breakdowns. If the monthly mortgage payment is gone double or triple, can they survive? And this is the one which hurting the market. This is part of it, which I believe that we're still gonna go through this pain for the next 2 more years or more. Even they reduce the interest rate by even 1% or 2%, I still believe there will be some casualties of this all of a sudden interest hike and inflation. And in another way, these people have to live somewhere, they have to pay somehow, but again, just be aware, just thought I should just share with you. So are you looking for a next place to invest? Now they're saying Hamilton, waterfront. The waterfront downtown Toronto has become way too expensive. The cost to buy is about $1,500 per square feet. And now they're looking into Hamilton, which is about 45 minutes away from downtown Toronto. And I do believe there is going to be a shift as well, because of the location, because of the GO train and so on. This is going to be another market one should look into it, whether you want to buy a condo or single family homes or so on. Be aware the city already have pre-planned, they have master plan, and it could be reasonably good investment for the long-term basis, by the way. Rooming house, this is something coming up in next year, by the way. Those who want to have more than 4 tenants in a single family home, you need to have a license, you need to get permission, you need to get fire and health come in and inspect your property twice a year. Is it profitable? Absolutely, it is profitable. A lot of Canadians do not realize that when they turn their home into rooming house, actually it's illegal. Be aware of it. Your insurance may not cover you in case anything happens. People are just doing it until they got into trouble, and then they contact you. Again, check with the city. How many tenants are you allowed to have? Make sure you are okay with the insurance as well, though. This is the real life as we speak. We have 40% of all the new construction, a lot of condos are owned by investors, and 1/3 of them want to get rid of it. Is it a good time to buy? Yes, you can, if you can utilize some of the latest strategies. Latest strategy could be owner financing, where it makes sense. And these investors are used to the fact that they can make money and they can lose money. Some of these speculators are accustomed because they invest money in the stock market. Market goes up and down, and they have enough money to absorb the losses. Remember one word: capital gain versus capital losses. Jerry, are you there? Jerry, maybe not. I guess he's not in. Okay, that's fine. Not sure. Okay. All right, capital gain versus capital loss. Be aware of it. Some of these investors, when you are negotiating with them, just bring to attention. And some of them will take a bite. Right now, as we speak, we were negotiating a deal, I believe in Oshawa, where the gentleman bought a condo for 300,000, and he might be willing to sell for half the price. Anybody looking for a condo in Oshawa, please contact me, and I can perhaps pass this beautiful deal by making a small profit for us at the same time. These condos are about 500 square feet, bachelor. It's a reasonably good deal. And we have a bunch of other deals in BC, as well as Toronto area. Anybody looking to look for a decent property at a discounted price, let us know. Our delinquency rates are climbing up, by the way. We discussed last time, by the way. The rent, how much can you increase, by the way, next year? The guidelines already in for 2024 is 2.5%. Not a huge, but this is what it is. That's what it is. Delinquency rates are much higher in two places, Manitoba as well as Saskatchewan. The Alberta, Saskatchewan, and Manitoba are the three areas where we have the highest. The highest is still in Saskatchewan, the prairies. Even though we have potash, it's a lot less. It's about 1 million people or more or less live in Saskatchewan, but there have been some setbacks. Some fraud happened not too long ago. There are still great bargains out there if you're looking for multi-units in Saskatchewan. I'm going to skip this one. Let's skip all that. If you have any questions, please feel free to ask a question. The only thing I like to want you to pay attention right now as we speak. There's going to be eyewitness field training on Thursday, which is on September 14th, day after tomorrow. That will be in Toronto. Those who are interested in it, let us know. How to buy discounted properties. We are doing this finally in person as well as online. We're doing it online on Saturday and in person on Sunday. If you want to attend a real estate seminar, how to buy distressed real estate properties in Canada at Monte Carlo, which is close to Highway 10 and Derry Road, close to 410, Highway 410 and Derry Road. Tickets are available. We're going to have about 30 or 40 seats only available. I think a couple of them already been sold out. In case you want to come in or you bring your family or friend, please do so. Action we don't regret the most. Excuses don't count, by the way, in our business. Check before you invest. Before you invest with anybody, please check it out. Anything we share with you, our humble request to verify information not once or twice, maybe 3 times before you invest any capital anywhere. And if you don't have to work with somebody, that's fine. If you're doing some joint ventures, or you're getting involved into general partnership or limited partnership, please check before you invest. RCA, this is from the Ontario Security Commission, or wherever you are, check with the local municipal security commission of your province. That'll be healthy for you to do. What I'm going to do is I'm going to take a quick few questions, and I'm going to wrap up the meeting tonight in a few minutes though. Thank you, Frank, for sharing information. Dustin Siddle, thank you, Fernandez. Okay. Okay, question, Frank. Okay. Frank is asking a question. Anybody interested as a developer or a builder in Alberta? They have opportunities for you if you want to invest in Alberta, by the way. This is, we discuss again all day long today, was most 1/3 of Canadians have more than 30 years amortization. That's not a good thing for our economy as well as for Canadian homeowners, but that's the way these facts are, though. We're going to wrap up the meeting with something good for you. If you are looking for some sort of subsidy program if you want to be a builder, small time investor, you want to convert into something, there are all kind of funding is available for you. As long as you're creating an affordable rental units anywhere in Canada, please check with us or check with the subsidy programs available for you. And that could be great help. You might have money, but it'll be limited. But why not take full advantage of all the tax money which is available for you? Free look clause, make sure you have it every time you're buying a piece of property, especially for investors, for 30 to 90 days. And post-construction is coming. By the way, you will find the industry is going to be changing quite a bit as we come along. The next 3 to 5 years, our real estate market will be shifting, and there'll be a lot of new big players coming in. They feel that pre-construction have been extremely profitable for those people who bought it, but not realizing it. They're also facing the CRA, the flipping taxes and so on, and the capital gains. But again, that's something you need to speak to your CPA and see what your risk factors are and what exactly you want to do with your investment strategies, though. Just to let you know that our next meeting will be on next second Tuesday every month. Those who want a little bit hesitant about investing in Canadian real estate or especially GTA, I want you to take a picture of this thing that since 1969 to approximately 2021, average compound growth is 7.5%, which is unbelievable. If you have invested in any real estate, mostly residential, we're talking more strictly residential, your investment have done exceptionally well. We're talking about the last 50 years. Exceptionally well. All right, we're going to wrap up the meeting tonight here, unless anybody have any questions. I know we have so much information to pop out, but because of the timing, we're going to skip this one. Anybody interested in selling the home quickly on the junkie who would love to buy houses, please give us a call and see what we can make an offer for you right away. All right, just to let you know, our eyewitness training is September 14th. Those who are interested in attending it, there's a cost involved in it. Some of the pictures from the past. Even we are at Osgood Hall having lunch, where it's a very privileged place to go to. Some of the pictures from Montreal, Quebec, Calgary to Toronto area as well, though. All right, everybody, unless you have got a question, I'm gonna wrap up. I'll wrap up really fast, though. Trying, okay, will there be any more live events in the future apart from this weekend? Yes, we conduct meetings. We have seminars once a month for sure. Flippingforprofit.ca. Thank you, my friend. Appreciate Kevin. Robin, thanks, David. Okay, excellent. Frank. Okay, we see. All right, everybody, we're gonna wrap up the meeting tonight. I sincerely want to thank everybody for being here tonight, and I look forward to see some of you on Thursday and some of you on Saturday, Sunday. Good night, everyone.